I began trading gold in 1978. My first buy was at $187.50 an ounce. And what's different now than then that people don't understand and why they think it's a bubble and it's not, is back then it was only the United States that was really playing the gold market. You had guys like the Hunts brothers that had cornered the silver market, for example. It's a whole different world now. Back then, you know, it was the red Chinese. Nobody was doing business with them. And Russia and Eastern Europe were locked behind the Soviet Union's Iron Curtain. This is a whole global game going on. It's a global meltdown, and gold is the ultimate golden safe haven. That's why the currencies are, gold is going so high, is because that everyone knows that the only way that the Europeans or the Americans can get their way out of this mess, they're actually not going to get out of it, but to keep the Ponzi scheme going, is by printing more money. But they put those white shoe boy labels on it, such as QE2 and QE3. It means just printing more money. And oh, and by the way, interest rates. The Federal Reserve said they're going to keep them down near zero until mid-2013, and the European Central Bank is talking about lowering them. So the lower the interest rates go, and as they stay low, the higher the price of gold goes. It's simple arithmetic. You know, there's another thing, too, that I want to mention when they're talking about comparing gold to the real estate bubble and the dot-com bubble. Those are different bubbles. Those are real bubbles. The dot-com bubble was built upon, you know, these Silicon Valley con artists that had no business plans, but a lot of Wall Street barkers hype. And the real estate market was just that, a bubble. They created it. Remember, they had those wonderful ads on TV. You know, your house is as good as a piggy bank. Take out a home equity loan. People flipping homes, buying pre-construction price condominiums in Florida. That's a bubble. This is not a bubble. The bubble is the fake money that the Federal Reserve and the European central banks are printing. You know, I don't know if they're going to call it QE3 or some other kind of scheme, but they have to do something to keep pumping money into the system. They're going to do something, and that's why gold prices are going up. Washington is talking about more austerity measures, the same kind of austerity measures that are racking through Europe as well. What does that mean? It means more cutbacks. So at a time when the economy is already slowing down, they created, as you pointed out, zero jobs, which is just perfect for Washington because they bat zero on just about everything that's thrown at them, whether it's a war on drugs, wars in Afghanistan, wars on education, you name it, that's what they do, zero. So what it shows us is that at a time when things are slowing down, it's going to become much worse. They gave it their best shot. Remember, they had Larry, the brilliant Summers, as the head of the economic team. Remember the stimulus programs. Remember under Bush TARP. They've given it everything they can, and they're coming up with goose eggs. So we're only going to see it get much worse. Well, again, I just mentioned where I talked about the $1.2 trillion that the Fed fed into the financial institutions and banks, all of this QE stimulus, all of the Obama stimulus and Bush TARP. Where did the money go? It's called too big to fail. So the money went all to the too bigs, and the rest of the people are too small to save. The gap between the rich and the poor is the widest in the United States than any of the industrialized nations, and it's the same trend that's going on worldwide.